Hi, everyone. Thank you so much for joining us on this NetBase Quid live session. I'm Harvey Magnola, Director of Demand Generation at NetBase Quid, and leading this session is Pierre Dongo Soria of HSBC. Before we get started, I did want to point out that there is a Q&A widget on the right side of your screen, so feel free to add any questions that you might have throughout Pierre's presentation, and we'll try to get through as many of them as possible at the end. With that, I'll go ahead and I'll hand it off to Pierre.
Thanks, Harvey. Thanks and welcome to all. Here we are going to talk about market narratives and how can we incorporate those into our investment process. Before going into that, I want to give you a bit of an intro. So as Harvey said, I work at HSBC Asset Management. It's a large asset management with over 500 billion of AUM and with a global presence. And in there, I work as a multi-asset strategist responsible for developing asset allocation strategies, which is buying equities or selling bonds, those type of top-down macro investment decisions, and also in charge or responsible for doing some investment research, where market narratives plays a big part. And as a investment house, we have certain investment beliefs, our core investment philosophy, that I think it's important here to mention a few, especially about how asset markets work, because it's the main motivation for us to focus into market narratives. So first of all, I think the starting point would be to think that the economic system, so the economy, is a complex system. Too many variables at play at the same time. Relationships are not stable over time. There's a lot of uncertainty, a lot that we don't know. So it's difficult to forecast. And in here, financial markets, so market prices, the movements of stock prices or bond prices, don't move one-to-one with the fundamentals. They move more. And in here, there is a psychological factor that plays an important role. So psychology is an important factor here in terms of how or why prices move. And also, it's not just about the news, so about new information that comes in. It's also important for the price of something to move is to compare that that information relative to what was expected. So the price moves reflect how the incoming news releases plays out relative to what was already discounted. And that's going to be an important play in the future of this presentation. Because of how we are seeing markets in this way, we develop a few bullet points about our investment philosophy. I'm not going to cover all here. I think the most important one would be that valuation is key. What means that is that the price that we pay, it's an important factor that will drive returns and risk of an investment. It's very different to buy a company at a price of 100 than a price of 1, given the same fundamentals. The return profile will be different and the risk that you're taking is different. So we put a lot of effort in understanding the current price, what it means, the valuation measure. And here at HSBC, in the Global Investment Strategy team, which I am part of, in a nutshell, what we do is try to help clients, internal and external, try to help clients understand if risk is being rewarded. Simple as that, but quite difficult. So we have developed a whole framework to try to answer that point. Investing in US equities. There's a lot of risk and there's reward. Does it make sense to take that risk or not? Or compare that with other investments, imagine government bonds in Europe or corporate bonds in Asia. The same idea. Question ourselves if risk is being rewarded or not. So for that, the first step is trying to understand the reward side. So part of our investment framework is to measure market implied rewards because the starting point is the price. So here we build expected returns. So if you buy an asset class, what type of return should you expect for the next 10 years? 5%, 3%, 10%, it depends, and it moves over time. So we try to understand and measure those rewards across asset classes through time. We do it on a monthly basis. But also, once you decide this asset class has an interesting reward, the question goes into what's the risk. And the risk is not just one number. We need to be more thoughtful about it. So what we do is try to understand the risk environment. So we analyze the economic and policy risk that comes from here. For that, we have developed different tools, and we have a team of economists that help us here. So we track the business cycle in real time through some econometric techniques. We develop macro scenarios. What if a vaccine appears? What if it doesn't? What's the impact to global growth in a specific region, and what's to other region? And for example, what's the economic and policy regime as well? We try to push or to think about what's the current regime. So all of that is, again, trying to understand the risk environment, where these asset classes live, in which type of a scenario, again, in order to understand if risk is being rewarded or not. Usually investors will stop here. They will focus on what they think is a good reward. They will try to analyze the risk environment and say, yeah, it makes sense or it doesn't make sense. We think that we go a bit further, not just by thinking about our view, but thinking also about the market view, because again, it's important to understand what's being discounted. So here we try to infer what factors are discounted by the market. That means that we put a lot of effort in trying to understand what the price is telling us, what this price of, imagine 10, is telling us about the economic growth that is expected to happen, or the inflationary scenario that is expected to happen, or the earnings picture that is reflected in current market prices. So we look into current market prices and try to infer the macro scenarios that comes from these ones. And also, and it's here where we look into market narratives. So market narratives, it's a tool, of the whole framework where we try to understand if risk is being rewarded across asset classes. Here the question then is, why are they important? So if we go back to our investment beliefs, we, as I just said, it's important to try to understand what investors are discounting. And that's another way of saying what is future expectations, what is expected to happen. If many people are expected for this to happen, it will become consensus and it will be reflected in the current price. And we know, because we are human, social animals, that stories shape our perceptions of the world and expectations of the future. So the stories that we tell ourselves, that the market tells us, influence what we think about the future. As with this kid, somebody is telling him a story and shaping his worldview. Similar like that. So I hope that this is clear, that market narratives are important because those stories, trying to understand those stories, could be useful in understanding what is the market thinking, what is top of mind, what they are obsessed, what they are thinking about it. So here we put the analysis of market narratives. So I hope I have convinced you that it's important to look at market narratives. It's important to try to track the stories that the market is telling us or is telling itself. And then the question moves into how we do it. And here is where Quid plays an important role in our investment process. So our approach, which would be similar to other Quid users for market narratives, would be, first of all, identify relevant financial news to analyze. Quid has a lot of news, and usually, as all models, garbage in, garbage out. So what we try to do is to filter as much as possible the ones that are relevant, the ones that are important to reflect market narratives. I've seen a couple of examples from Quid University, so we have also some big search bars with a lot of text trying to filter the news that are only relevant for us. In this case, about market movements, about what's going on in the market environment. So then we move into Quid, where Quid process these articles with thousands of analysis and build the networks and the tools for insights. Then we look into those ones and try to identify the top of mind market narratives. So what is top of mind? What the market is focusing, what they are overlooking. That could be something interesting as well. What they are not thinking about. So all of that comes here, and then we track that over time. It's important also to see the evolution of those narratives. Here I'm going to give you an example, a real one, something that I have presented to investment portfolio managers in the UK, which is what we call our market narrative map. We have also a nickname, which is the spaghetti chart, because this looks like a ball of spaghetti that we just throw against the wall, and that's what it sticks. So that's our spaghetti chart. And here, as many of you will know, each dot would be a news article, and the color would be the cluster. So all of those articles have similar language, are talking about the same thing. And then we get the output from Quid, and then we dig a bit deeper and try to create our own clusters, but influenced by the clusters that Quid has provided to us. Here, people tend to just stop and think, okay, there's COVID-19, for example. How many stories are about that? About that volume or the quantity about stories. But you could do that in other ways, just by looking into the news. The beauty of this type of analysis is the network, because it's not just thinking or counting how many articles about COVID is, but where are they and how they are connected with other stories. So in here, for example, what we see in the middle of this spaghetti chart is the theme or the cluster that it's being called here fiscal stimulus or fiscal policy. It's in the middle. What means being in the middle? It means that if you're talking about US elections, at some point you are going to start talking about fiscal policy. If you're talking about COVID-19, at some point the discussion will end up mentioning fiscal policy or fiscal stimulus. If you're talking about stock market dynamics, so has the stock market went up or down, or is there been a rally in markets or not, it's going to be discussed about fiscal stimulus or fiscal policy. Even if we start talking about central banks, which is the monetary policy, we will end up talking about fiscal policy. It's what is connecting everything. That's why it's in the middle. It's central for the market thinking, which means if something happens, if there's new information on fiscal policy that changes our thinking about fiscal policy, will have a material impact on prices. And this highlights the importance of fiscal policy, and that's why, for us, we have said for many months now that the key risk to markets nowadays is a potential policy error from the fiscal side. Why? Because it has the power, as we can see here, to change perceptions, to change the story, which will in turn change market prices. I have here another example, because of course COVID-19 is quite trendy. That also highlights how we are trying to use this spaghetti chart or market narrative maps in order to decide or to build our investment views or convictions about those views. So we all know by now the whole story about COVID-19. It started in January, and the market fell a lot in March. So there were essentially a month and plus that even though COVID-19 was known, the market was still going high. Why? And we can see it here. So this is the chart for January and February, where I highlighted with the tax system all the news that mention COVID-19 or coronavirus. And we can see here, relative to the other one, that it's not in the center, that red thing. It's a bit far away. Of course, there are a few other places, but the main one, it's here. So if you start going into there and looking into the titles and trying to understand what's going on, at that point, between January and February, COVID-19 was thought, believed, as a Chinese story, a Chinese shock. It was just in China. So for us, that was a key risk. So I remember mentioning many economists at that point were using the SARS experience as a template of what could happen. And I mentioned, I think 2008 is the template. Why? Because I was looking at this chart. This chart was telling me that the belief of the market was based that the COVID-19 was going to be a contained issue in China or mainly Asia. And from the information that we were getting between January and February, the risk was going that was not going to be the case. We knew at that point that COVID-19 was easy to spread and that there were a lot of asymptomatic cases. So it was likely that this could get out of China or of Asia into the world. But the belief was not that. It was a risk, but not a belief. So essentially at this point, we were saying there are two pillars that is holding markets. One, that fiscal policy, or there will be policy support. And if we talk about that with our economists, yeah, there was enough evidence to suggest that, yes, that's the case. And the other pillar was that this issue called coronavirus, COVID-19, it's an issue there, not here. Even I was joking that, looking at this, joking that, oh, imagine London in lockdown. Crazy, right? See where we are. And again, just by looking into this chart, I was able to understand the structure of beliefs, understanding that risk or what the market is telling, the stories that the market was telling about COVID-19, it was just a Chinese issue, just in Asia, not here. And of course, what happened is that it spread. So that's why the time when cases start to grow in Italy and in South Korea, the market react a lot because the belief changed, the perceptions of the world, their expectations completely change into thinking, oh, this is not something contained or a shock to that place of the world. It's a global shock. And we could see later of how the market narrative moved into March. Same idea, but now we could see everything is red color. So the conclusion here is that the narrative on COVID-19 moved from being a peripheral shock to China to a global shock. And that helped us to try to understand the risk environment where we were living. Again, trying to understand if risk is being rewarded. This is our analysis of the risk, because in that time, there was some belief that was against a bit of evidence that we were getting. So this is the way that we use the spaghetti chart. Looking at these charts on a monthly basis, properly zooming in, reading the articles, trying to understand what's going on, and putting a lot of effort in what we are missing, what's not, what is peripheral, what's central. But we also try to go beyond that. And here we are going to become a bit technical, but please stay with me. So this is useful and it's pretty cool to see that chart. But also, we can look at the data and apply some math into this. As a quant, I like to do that. So we want to look at the structure of market beliefs in a more systematic way. So for that, we leverage graph theory and data science techniques, essentially to measure what I like to call popularity. So trying to understand what is popular and what's not, and what has the potential to become popular. Seems easy, but if you try to define popularity, it's a bit tricky. And I think with Wikipedia, I found a good one, which says that popularity has to do with being in the middle point of a group and having influence on it. Middle point and influence, it sounds like the charts that we just looked, right? Something that is in the middle has influence, so they are popular. Another way to see this is if imagine someone has a lot of, followers, and if I decide to say something about a product, those followers will be influenced by me just because I have a lot of connections. So essentially what I'm trying to look is who are the influencers in market narratives, as people do with Instagram. It's the same idea. It's just trying to find connections, because if somebody or a group of stories or a particular theme has a lot of connections, they have a lot of influence. So if we think about graph theory or about these spaghetti charts, and we look into this, what I'm trying to search is these ones, because they are in the middle, they have connections to the people of the right, to the people of the left, and to the other ones. So that's the popularity metric. Trying to look for those type of articles that are in the middle and have influence. In other way, trying to identify who are the key influencers here. We can look that by charting, so seeing the spaghetti chart and zooming it, or we can do it in a more systematic way and properly measuring, having a number behind that. So that's what we do. We measure popularity as a bit technical will be a centrality measure for a group of things. We have developed certain different techniques, and the first one would be the popularity of themes. So how we do it is, first of all, we find different keywords that creates the theme. For example, COVID-19, coronavirus, pandemic. Those three words, let's search for those words across all the articles that I have. And then I download the data and measure the popularity metric, which is some sort of centrality measure from graph theory. And then I track that over time. That's what we try to do. And this is a way that we try to understand as well how different themes become popular or not. And this is the case for three different themes that we track: COVID-19, policy support, and US-China tensions. What we see, of course, is that, surprise, surprise, COVID-19 is pretty popular nowadays. The score that goes from 0 to 100, being 100 the maximum, it's close to 80, 90. So there's a lot of things, a lot of articles mentioning COVID-19 that are influenced. The same happens with policy support. So if we see starting March, there was a big jump as COVID-19 was jumping. Policy support became more popular and has stayed the same for now. So it's an important theme, as I just mentioned. Something that fell out of popularity is US-China tensions. If we did this chart, but instead of 2020, in 2019, we would see that this was the main theme, the most popular theme, and it has faded away. So that's a way that we try to track the popularity of different themes. Something once, when I started looking into this, was, oh, what if I start looking into the popularity of economic growth as a theme and compare that with the popularity of recession worries as a theme? So trying to understand, it's a different way to try to understand sentiment, but trying to understand the expectations or the potential influence from economic growth. So this is something that I call newscasting economic growth. So it's not predicting, the system is too complex for that. I'm just observing what are the expectations of growth by looking at the popularity measure of two different things: of good growth, let's say economic growth, recovery, surpassing expectations, or the popularity of the theme of recession worries, which is more about slowdown, recession. This is what I have plotted since 2018. What is interesting is that it kind of tracks pretty well the behavior, or at least in my expectations, of what has happened. So throughout 2018, there were falling expectations of economic growth, and then we saw recovery after the Fed started doing what we call the policy pivot, so starting stimulating the economy. Up to COVID-19, we got a shock, so growth expectations fell by a lot, and we've been recovering. And well, the question mark is now what happens. But again, this is a pretty good way of trying to extract from news articles in a systematic way what are the expectations for economic growth. And that helped us understand different things. For example, what is consensus or what is not, what is being discounted by the market by looking into this. If it's pretty high, then it means that the market is expecting or discounted a pretty good recovery environment, or they are assuming that type of environment. And lastly, we do a different approach, what I like to call macro topics. Again, the objective of this, with these themes about centrality or what's important, is trying to understand the context. So far, I've searched for keywords and highlighted that article. But if you read a news article, there are different topics within that one. So we apply a process in data science to help us understand this article is telling me about which type of topics. So essentially, we create a process where we go and the machine reads all the articles and then identify that every time there is the word equity or market or rally, they tend to be part of the same topic. They come together. The same with a topic, let's say, that says the Fed or interest rate or policy or monetary policy. That tends to be part of a topic, let's say topic number A. So then, with this understanding that, oh, there are 3 topics, and these are the words that tend to be on these ones, on topic A and topic B and topic C, we can understand that in a specific article, let's say, topic A covers 20% of the article, and topic B is 20%, and topic C is other 60%. So one article can be decomposed by their topics. There's talking about interest rate or monetary policy, it's talking about economy, and 60% is talking about equity markets, for example. And if we do this in a monthly basis, I realize that they tend to be the same topics. So there's always a constant in terms of these macro topics. That's why I call it macro topics. And so far for this year, these are the ones. So every time you open a newspaper and try to read what's going on in markets, there will be the topic of the economy, about markets, about COVID-19 nowadays, about the profit cycle of earnings, about US politics, about international politics, about the capital markets like the IPO of this company, and others that come and go, but this seems to be pretty constant. And because of what I mentioned before, instead of trying to understand the centrality or the popularity of a specific article or group of articles, now I can understand the popularity or importance of a topic. So what is inside the article. And here we show what I like to call the lollipop chart. So a bit of foodie with the spaghetti chart and the lollipop chart. But it is important for us because, again, it showcases how the conversation changed over time. So the topic of the economy, what are the words that are used to describe the topic economy changes over time. And what we can see here, well, of course, in March, markets became quite important as a topic. And I guess if we do it for November, US politics will be the most important one. We can measure how important relative to the other ones and the conversations around that. For example, the economy and COVID-19, if you start to see the keywords that are there, you will notice that for the economy, it also says pandemic. So our understanding is that the coronavirus created two important topics. So we can understand the coronavirus as 2 different things. One, as a health issue. So that's where we start to see cases, hospitalizations, all of those news, but also as an economic issue. So that's where we start to see the furlough scheme or unemployment numbers or the impact to the economy. So there are based on the same virus, it has created 2 different stories. One story around the health issue and one story around the economy. And we can measure the importance of those or the influence to the market thinking of those and how the conversations of that changes over time. For me, this is pretty cool and pretty useful, again, in order to understand the context. So just as a summary, I hope I have convinced you that the market narratives are important because they can help investors understand the context in which valuations, the reward of investing in this asset class, lives. And in that way, with our purpose, it will help us assess if risk is being properly rewarded or not. But this needs to be done in a structured way. It's not just me reading a few headlines and thinking what the market is feeling or thinking. So for that, we leverage Quid's technology and data science techniques to identify, measure, and monitor the evolution of market narratives. And in particular, we have different ways. The first one, the spaghetti chart, the market narrative map, because it showcases the key narratives of the month, and it's a pretty cool visual. Also, the popularity of themes. So instead of looking at as a cluster, we try to track specific themes. For example, we could look for ESG as a theme and monitor how important or popular it has become. Spoiler alert, pretty popular. And also, using the same approach, we can try to get a better understanding of the growth picture that people are telling themselves. So that's where the growth newscasting comes in. And finally, what I just show is the macro topics. So instead of thinking of an article that assumes, that explains, or covers just one topic, I can go deeper and try to think that that article has different topics and measure the importance of each different topic and look it over time. I think I'm running out of time. Thanks for all. I hope this was interesting and open to questions.
Awesome. Thanks so much, Pierre. That's probably one of my favorite presentations out of all the ones that we've watched. Really informative stuff. And at the same time, it also makes me hungry. And because I have a now I'm also craving lollipops. So really appreciate that. And thank you so much for this presentation. I think it's a great way to be able to demonstrate how important it is to identify what are central themes and how you could use that to drive your analysis. And also the way that you were able to take the data that you were able to pull from Quid and interpret that and translate that into some of these other visualizations to fit whoever it is that you're presenting it to, or at least fit the way that you want to be able to present the data. I think it's great that you're able to translate the data into something that is easier to digest, just going along with the whole theme of food. But it looks like we have time for one question. And it's really unfortunate because I feel like we could keep going and have a discussion about some of the data that you presented. But in the presentation earlier on, you mentioned that prior to running your analysis, one of the things that you do is you like to filter down the data to ensure that you have the right pieces that you could use to structure an analysis. How do you approach that part of your research or that part of your analysis to ensure that you're not introducing bias as you're filtering things out of your data?
Yes, a lot of work, trial and error. The topic group feature has been really useful, a game changer for me in the Quid search. But what I tend to do is search, let's say, for 1 week and try to understand if I'm seeing all the news articles that I want. If that's the case, then I expand it to 2 weeks and then start looking again. If I'm getting the things that I want to see, then I get it for 1 month and then I start doing it in a more systematic way. But my approach would be start small, do your search and then start small in terms of a short period of time and double check, because there will be just a few articles, if that's the case, and then start expanding it.
Right. Great. Thanks for sharing that. And I'm sure that'll be really useful for a lot of the folks who are, especially jumping into Quid for the first time and seeing all this data hit them right away, understanding where to start and, taking some of the pointers that you've shared will be really helpful for a lot of these folks. So thank you once again, Pierre. I'm going to go ahead and I'll wrap us up for this particular session. We do encourage you to take a look at all the other sessions that are available. We've got 2 days worth of sessions with really great information, just like Pierre. So we encourage you to explore. And also, if you haven't had a chance, share and post on social media using the hashtag NetBaseQuidLive. We encourage you to go out and join that conversation and see what everyone else is talking about. At the same time, we also would like to encourage you to continue exploring, not just in the data, but also in all the sessions that we have available. And we hope you enjoy the rest of your time at NetBase Quid Live.